Hi, I'm Sam Slator from Fund Calibre, and today I'm joined by Anup Maheshwari, who's the Chief Investment Officer of IIFL Asset Management. Hello.
Hi, Sam.
Now, IIFL is it's the biggest wealth manager in India, and you're a specialist in Indian equity management, so we're going to talk about that today. India is one of the largest or the fastest growing economies in the world, and I think it's going to be the third biggest economy by 2020 something. What's driving that growth?
India is actually the fifth largest economy in the world at the moment, but it's heading higher.
Yes.
A couple of things are helping. Number one, it's become the fastest partly because China has also slowed down.
Right.
But over and above that, I think what India has, which is fairly unique, is it's a very young population. The demographics of India are such that 60% of the country is under the age of 30. Mm-hmm. And we've seen, as a result of that, the services sector in India growing very rapidly. And that's been driving most of India's GDP growth.
Modi's now in his second term as Prime Minister of India, and he's made a lot of reforms in the last few years. If you were asked for the three most important things that he's done, what would they be?
Well, the first, which I think will be the most impactful from a long-term point of view, is an initiative that was actually started by the previous government, wherein every individual in India now has an identity card called an Aadhaar card. It's a biometric and retina scan driven card, and that records all the data of that individual. And what's happened through that card is, as a result of that card can be used to do pretty much any transaction in India, including opening a bank account.
Okay.
So just to give you a background to this, India got independence in 1947. It's been 70 years. And till about 5 years ago, half of the country didn't even have a bank account, right? 50% of India was not part of the formal financial system. But thanks to this program of the ID cards, and as a result of that, we've seen 350 million new bank accounts being opened in the last 4 years alone. Wow. And that's a seminal change in the financial landscape in India. So I'd have to say that's probably the most impactful reform so far, which will have effects over the next couple of decades, because there's a large part of India that wasn't part of the formal financial system that is now coming in and has an opportunity to grow. The other reform from a business point of view that's been pretty impactful is the goods and services tax reform. So India always had a very complicated tax structure, and they've been trying to simplify taxes over time. So GST has been something that was pending for a long period of time, and it finally came through in their first term. So that's been pretty impactful too. And I guess there's another reform which is yet to come, which they're talking about right now, which is privatization of government companies. So we've seen this government talk a lot about it in the past, but hopefully we'll start seeing that as a new phenomena of reform in the next 6 months. So that's something that people are looking forward to in India as well. So
presumably that will bring about more opportunities, because you'll be able to invest in companies that you weren't previously able to invest in.
Some of these are listed companies, but they will get privatized, as in moved from government hands to the private sector. And Modi's sort of catchphrase is that the government shouldn't be in the business of running companies. They should be in the business of governance, not necessarily running businesses. So I think this is part of his policy to allow public sector or government-owned companies to get privatized and work more efficiently.
The economy, while it's the fastest growing at the moment, has also slowed slightly. The IMF has downgraded the growth forecast for this year. Is that a result of the China trade wars, or how does that impact India?
So it's not really the trade wars. In fact, oddly enough, the trade wars are positive for India, because as the US and China have challenges with each other, there are a lot of US corporations who would prefer setting up a base in India as an alternate sourcing area. So it actually works quite well for India. But India has slowed down for a lot of reasons of our own making. Some of these tax reforms, while are good for the long term, but they've actually slowed down growth in the short run while people are getting used to it. Also, the government in the last 1 year has been spending a lot lesser than usual to try and control the fiscal deficit, and that's had a bit of an impact as well on the economy. So these are typical road bumps that you tend to get from time to time in a growing phase. I mean, if we look at economies like China and Korea, they went through 30-year growth cycles. India is about 15 years into this growth cycle that it's in. but you're bound to face a few years here and there where growth is likely to be lower than normal. So we still think India is potentially a 7% type of growth economy once we get back to normal.
And as part of its response to the slowing growth rate, the government's introduced a set of corporation tax cuts, which has brought down the level overall, but particularly for manufacturing companies, it's gone down to about 15%, I believe. What sort of manufacturing companies do you think would be attracted to India?
So the government's really keen to, like you correctly said, bring in more manufacturing investments into India, and they've cut the corporate tax rate for new units down to 15%, which makes it pretty competitive. Yeah. What the Indian government is trying to do is really reclaim a lot of lost supply chains. You know, India used to be one of the largest exporters of textiles. That moved away to countries like Bangladesh, Vietnam. The whole idea is to bring that back. Similarly, in chemicals and pharmaceuticals, India lost a lot of market share to China, and now that's beginning to slowly come back to India. In electronics, India is a huge consumer of electronics, given a young population, and we import most of these things right now, which is a terrible thing to do because you're importing billions of dollars of phones. So the government's again encouraging people to start manufacturing phones locally and set up facilities within India, so that can help create jobs. So the focus has really been on trying to boost manufacturing because we have a large population, you need to give them jobs, and manufacturing clearly is one of the best ways to do that.
One of the areas that's of particular interest to your company at the moment is financial services. I think you alluded to this with the card that's now in place where you can open your bank account, etc., and you can do payments through it. What other reasons are there that makes that sector so attractive at the moment?
Well, financial services in India is one of the most evolved sectors in terms of the infrastructure around financial services. So if you come to India, India's infrastructure is not particularly great, but the financial services infrastructure is fantastic in terms of regulation, technology, etc. But we're very early in this journey of financialization of the economy, as we call it. So just to give you an example, if you look at borrowings by individuals in the country, if we look at the developed world, for instance, household borrowings as a percentage of the total economy or the GDP is between 70 to 100% of the GDP equivalent is borrowed by households. In emerging markets, that's between 30 to 50% is the individual borrowings. In India, that number stands at 15%, which is one of the lowest in the world. And therefore, what it means essentially is that the average Indian has very little debt today and has the ability to borrow a lot more and spend a lot more. So in a consumption economy, it's very important that financial services are available to you at the right interest rate so that can induce spending. And again, India is, this is a phenomena we've seen only in the last 5 to 7 years. So we're very early in this curve. As I mentioned, we've had 350 million new bank accounts opened. Simple things like a credit score, which you'd be very familiar with here, is really just a 5-6-year-old phenomena in India. So they're now of a 1.3 billion population, there are about 440 million people who have a credit score for the first time in the last 5 years. And that will encourage more lending and borrowing and spending. So we think we're very early in this journey. We can sort of grow at 15% in terms of financial services as a sector every year for the next decade. And we'd still not be, really up to our neck in debt. So in that sense, India has got a fairly long way to go in financial services. And there's some very well-run companies in India in the private sector, which are growing. I mean, I'll just give you one example. There's a company called HDFC Bank. And HDFC Bank has grown at 20% every quarter for the last 40 quarters. So we're talking of a 16-year period where they've grown at 20% quarter by quarter by quarter. And they can pretty much sustain that for some time to come. So that just gives you a sense of how scalable growth is in India, particularly in financial services.
And you're on a whistle-stop tour of Europe at the moment. You've come to the UK for a couple of days. You're off to Stockholm in the Netherlands, I believe. Is that the usual stop-off points for you, or have you got renewed interest from these countries? How does that?
Yeah, well, so the most amount of interest in India comes really from the US and Canada to some extent, but Europe is the next sort of largest area of interest for India, particularly the Nordic region. Actually, there's a lot of pension fund money, sovereign fund money that has come into India from the Nordics. So yeah, we come across to meet clients because they're sort of interested. India is a nice, interesting growth market in a world that isn't growing as much. And to that extent, India offers some really interesting opportunities, not just for growth, but also some fairly interesting higher interest rates, wherein people are quite happy to also invest into interest-bearing securities in India. So we see a lot of global interest by large institutions, particularly in a zero interest rate environment globally. Yes. They're looking for whatever growth they can get, and India fits the bill quite well.
That was really interesting. Thank you very much.
Thank you very much. Thanks.
I'm Sam Slater, and if you'd like to find out more about IIFL India Equity Opportunities Fund, please go to fundcalibre.com.